I started this YouTube channel on November 15th and started talking about what causes a market crisis and general market updates from late November and mid-December. Part of the reason I started this YouTube channel was because I somewhat sensed another interesting market environment coming, whether it's caused by geopolitical issues, excessive CPI, which gives limited options for the Federal Reserve, or just plain political issues which may be incurred given Donald Trump is starting his second term as the President of the United States. Now, I just want to give you a quick history of how my thoughts on the market evolved by giving you a recap on the videos I uploaded. I sensed that the market will be experiencing a meaningful downturn, as I mentioned in my Recession Might Really Be Coming video, which I uploaded on December 12th. And on January 15th, I uploaded a video saying, this is the dumbest market I've ever seen, given the market was rising at the start of the year, not knowing what may come. Then, on February 15th, I uploaded a video saying, watch out, this will happen in the market, giving 3 scenarios which may happen in the market, which mainly involves how Trump and the Federal Reserve will set the tone of the market. Afterwards, I uploaded a series of market update videos in the past month saying that we should all be careful with our actions, given the market may act against our will. By the way, I'll upload a long compilation version of my market update videos for some of you who might want to watch the videos in one go. If you watch the videos, you'll get a good sense of how I predicted the market to go down since late last year, and this will be a very good tool for you to learn how to read the macro data and how to analyze them. Okay, so looking at the market, I had to upload another video today because there's just been too much happening in the market. And I wanted to just kind of reassess the views we had on the market and see where we are headed. Okay, over the course of last week, not much meaningful data came out, and even if they came out, no one really cared about them because everyone was so focused on a single word, tariff. And as I mentioned in my previous market update video on Liberation Day, Trump announced a 10% tariff on all imports into the United States and higher tariffs on goods from around 60 countries, including China and European Union. The baseline tariff was 10% for all the countries, and for Mexico and Canada, the 25% tariff also was imposed, which went into effect. Okay, so a lot has changed over the last week, so let's just recap the tariff rates for the key countries. 31% on Switzerland, 36% on Thailand, 25% on South Korea, 26% on India, 24% on Japan, 46% on Vietnam, 20% on European Union, and 104% on China. Okay, for those of you who don't know how the 104% came about, it's basically the initial 10% tariff imposed on China over fentanyl concerns in February, followed by another 10% extra imposed in March, plus another 34% imposed around Liberation Day, and another 50% imposed as a retaliatory measure against China's retaliation against U.S. goods. Okay, so factual stuff are all over the news, so I won't go into further details. Again, let's focus on what's important, implications and predictions. Last week, I noted that based on research data, the Liberation Day tariff announcement could boost PCE prices by 1 to 1.5 percentage point this year, which would most likely be realized in the middle of the year. So basically, from the current inflation of 2.5 to 3%, inflation can even increase more to around 3.5 to 4.5% level, which will even be more catastrophic to not only the US, but also to the world. But over the course of last week, with the newly announced tariff measures, I'm not even sure whether the impact on inflation can be calculated anymore. These nonsense numbers are just making predictions meaningless, and because it is meaningless, I feel like economists have now given up on making any hard predictions on what will happen. But what happened already happened, so let's try to go over the current environment. Number 1, inflation is now super vulnerable. Even if the short-term inflation goes down, if the current tariff plans are implemented, CPI in the second half will rebound very quickly. Number 2, Federal Reserve is getting busy. Current prediction is skewing towards a rate cut starting from June or even from May. Some analysts are now expecting around 4 rate cuts within the year. Number 3, market is down quite a lot within the range of 20 to 25%. Forward price to earnings ratio of big tech stocks with decent earnings are now in the range of 20 to 25 times versus 30 to 35 times a few months ago. Okay, having that said, let's try to see what may happen moving forward. First, let's try to get a sense of the best case scenario and the worst case scenario. This would be the best case scenario that may happen in the market. Number 1, starting with Japan and South Korea, multiple countries follow the 2 countries in settling tariff terms with the US. Somehow, all countries reach an agreement on a tariff rate which effectively adjusts their export pricing to the extent it just reaches a similar level as adjusting their FX rate to a few years ago. Number 2, China gets isolated and the US has strengthened its relationships with all other nations, and China has no choice but to strike a deal with the US. Number 3, while this tariff settlement is ongoing, in order to keep the economy afloat during the chaotic times, the Federal Reserve starts cutting the interest rate from May and achieves around 4 rate cuts within the year. Number 4, during the chaotic times, US consumers significantly reduces their spending to prepare for a recession, and CPI data gradually comes down to 2% level, justifying the Federal Reserve's rate cut. Okay, under this scenario, there are multiple sources which can push the market up and up and up. Remember that I told you that investors are always focused on forward-looking and moves a few steps ahead? Under this base case scenario, every time each country reaches a settlement of the tariff, market will go up, and every time the Fed cuts the rate, the market will go up. And as the CPI data comes down, the market will move up. As a result, this base case scenario can trigger a new bull market. Okay, next, let's look at the worst case scenario. Number 1, China and the US continues to fight over tariff, continuing to take retaliatory actions, and other countries also follow China's lead, fighting against the US, which delays any settlement of the tariff. Number 2, the US is short of allies to purchase newly issued US Treasury bonds, and US's funding capability gets significantly reduced. Countries like Japan and South Korea may still purchase US bonds to maintain their relationships, but it'll not be enough. Number 3, the Federal Reserve will decrease the interest rate significantly to save the economy, but it'll only heighten the inflation level across the nation, which accelerates the stagflationary situation. Number 4, China really goes to the extreme path and starts selling US Treasuries in the market. This will effectively cause a collapse of the dollar and the US monetary system, which may really evolve into something which may make the US even consider taking some sort of physical actions involving its military. Okay, what do you think? Please keep in mind that the 2 scenarios I laid out are really, and I mean really, extreme scenarios. Do you now get a sense of how uncertain the current situation is? Both are very extreme cases, but not impossible scenarios based on what's been going on in recent weeks. Okay, but we do need to take actions accordingly, so let's see what would be some smart ways to take actions in accordance with the current environment. Now, if we were to come up with a mix of 2 scenarios, which may be more reasonable, one scenario which may happen is this. Number 1, some countries which must do trades with the US to protect their GDP. It might not be China and some other nations which continues to retaliate against the US, but some countries like South Korea and Japan may negotiate terms with the US. Number 2, the US will somehow squeeze its newly issued bonds down the throat of its ally nations, which play along with the US by potentially offering better trade terms down the road. Number 3, like in both scenarios, the Federal Reserve will prioritize saving the country's GDP by lowering the interest rate starting from the middle of the year. Number 4, CPI will be extremely difficult to bring down, especially with the interest rate going down. But as the overall GDP growth of the US slowing down with the tariff situation, consumer confidence also continues to decline, keeping the CPI stable at current level. Okay, so this is a random scenario which kind of mixes the best and the worst scenario here and there. But however I try to mix the two, I seem to reach a same conclusion. Basically, geopolitical impact on the market in the midterm down the road is most likely neutral to negative, especially assuming that the Fed is going to lower the interest rate quite actively. Now, geopolitical and political things aside, valuation has come down a lot. As I mentioned previously, valuation of large global tech companies have come down by around 25 to 30%, or for some, even more than that. Non-tech companies' valuation have also come down quite a bit, which makes their valuation quite attractive. Now, for those of you who have been listening to me and watching my videos over the past few months, I'm sure you have been sitting on the sideline with cash, monitoring the market, wondering what you should do. Now, my view is that considering the attractive valuation, we should carefully monitor the market and always be prepared to enter the market whenever the geopolitical issues shows any signs of positive development. If circumstances allow, I think even slowly, and I mean very slowly, buying into the market in piecemeal from now would also be a good strategy to think about at this point. Obviously, you will have to pick the right stocks. In order to get a sense of the stocks to pick, please refer to my stock investment strategy for everyone video and try to focus on type B and type C stocks. Basically, the stocks which have decent growth and decent profitability with fair to slightly higher valuation would be good stocks to buy, especially if we assume that the rate cuts will take place in the next few months. Now, on the geopolitical and political issues, I don't want to make wild assumptions, but I will say this. Generally, these types of non-fundamental noises which impact the market goes away as time goes by. After the US announced a 104% tariff on China, even myself started thinking that these numbers don't mean anything anymore. What difference does it make? 100%, 1,000%, 10,000%. These are all the same, just some random arbitrary numbers which sound too remote to stay in the market permanently. So while we do need to care about the geopolitical and political noises that are happening in the market, it is time for us to focus on the fundamental valuation of companies too. Okay guys, now I know I've been very negative on the market since I started this YouTube channel, and I've been telling you guys all throughout that we need to be careful and extra careful and even more careful so that we do not lose money. I'm sure my warnings already paid off a lot for all of you guys watching. The reason I gave you those warnings was because I actually thought a crash like we experienced in the past few months may happen. And it actually happened. The market now corrected over 25%, and I think it's about time we shift the gears a little bit and actually think about when would be an ideal time to buy into the market. As I said, very slow, and please focus on my wording, very slowly buying into the market at this point may also not be a bad idea. After all, which stock to buy and when to buy is your choice. But I just want to make one thing clear. Let's now monitor the market closely with a less negative bias and be prepared to take actions accordingly. Now guys, with this, I plan to refrain from uploading market update videos as frequently as I did in the past month. I had too many messages I want to convey to you guys, and I believe that my job is done for now. I did my best to keep you guys from losing money during the past few months, and from now on, as I said, please try to make your best judgment to play around with the market. Please refer to my previous videos on investment strategies, and I'm sure everything you need will be there. I'll be uploading a fresh market update video when I feel like there are meaningful things to talk about. In the meantime, I'll upload some other interesting videos to share with you guys. Thank you guys, and I wish you the best, always.